For the past 3 years, experts have been sounding the alarm about a housing market crash. Where are all those foreclosures and affordable housing deals they talked about? Join me as we dive deep into the mystery of why the housing market hasn't crashed in 2023. It's time to separate the predictions from the reality and figure out what's really going on. One big thing that's keeping the housing market afloat is the retirement of baby boomers. As we get closer to the year 2030, a large portion of the population is over 65, and many of them have saved and invested their whole lives, and generally speaking, they're financially secure. Now they're retiring, and some of them are moving to warmer areas with lower taxes. This has reduced the number of available homes in some regions. I'm in Florida, and so we've always had retirees move here, but even though home prices and cost of living in general have increased here significantly, many retirees still choose to move here and to other places that are similar to Florida. As baby boomers downsize, some of them aren't putting their homes on the market. They might pass their homes down to family members, or they're holding on to them as rental properties. This is reducing the inventory of homes available for sale. During the pandemic, investors and homeowners took advantage of historically low mortgage rates. They bought up new homes, rental properties, and vacation rentals. Because of that, many homeowners don't want to sell and give up their cheap mortgages for higher ones. This has limited the supply of houses for sale and created a supply and demand issue, driving up prices. On top of that, homeowners decided to take advantage of the low interest rates by refinancing their existing mortgages instead of moving. This reduced the number of homes available for sale and added to the current market conditions even more. Now, for supply, around 62% of mortgage holders in the US are locked into historically low mortgage rates, aka a 4% or less interest rate. Now that leads to a drop in the number of houses being listed for sale. The current interest rate is close to 7% for comparison. Home prices have gone up significantly in the past 3 years, along with interest rates. For most people, it doesn't make sense to move. Even if you're looking to downsize, for instance, your mortgage payment might be the same or even more for a smaller house. Even though interest rates have increased, this imbalance between supply and demand has caused a bottleneck in the market and has made the prices go up. Demand continues to outpace supply, and competition has ramped up for buyers. In some housing markets, we're still seeing bidding wars resulting in homes selling above asking price, contributing to the inflated home prices. This price surge has priced many potential buyers out of the market. Some were waiting for a crash to buy, but the combination of rising prices and interest rates has kept them from buying a home. Affordability has become a major concern for many homeowners. Property tax and insurance has gotten significantly more expensive as well, which hasn't helped affordability. The rising cost of construction materials and labor has driven up home prices. Builders are facing higher costs when constructing new homes, and these expenses are passed on to the buyers in the form of higher prices, of course, right? This also contributes to the lack of affordable housing options in many areas. Between 2012 and 2022, 15.6 million households were formed, but only 11.9 million housing units were completed. This imbalance in supply and demand has made the housing market more challenging. A few things have contributed to the decline in new construction. There's a lack of land, zoning regulations, and labor shortages in the construction industry. These factors have made it difficult for developers to keep up with the demand for new housing, especially in areas with high population growth. Also, with an uncertain economy, I would imagine many builders are hesitant about starting a lot of construction projects. Another thing to consider is the month supply of inventory. Currently, the national median existing home inventory is 3.10 months, indicating a seller's market. A balanced market is considered about 6 months of inventory. This is an improvement from a year or two ago where, I know in my market, like sometimes it was less than a month inventory. So this limited inventory means buyers are still facing competition, driving prices even higher in certain regions. Obviously, real estate is hyperlocal, so some places may not be experiencing as much competition as others. To better understand the housing market, let's look back in time a little bit. In 1979, home prices in the US soared despite high inflation and a recession. However, the subprime mortgage meltdown of 2008 was a different story, mainly caused by shady lending practices that are now more strictly regulated. The market is more resilient now because of those stricter regulations on banks and higher credit score requirements. That's resulting in qualified and low risk borrowers. If you know anyone recently who's tried to get a loan, you know that it can be pretty difficult, especially if you got a loan in the early to mid 2000s. Totally different. These regulatory measures have helped create a more stable lending environment. Hopefully, that means we're less likely to have a widespread housing market crash like the one during the 2008 financial crisis. So, what's the bottom line? While there are some overpriced homes that are on the market that might require some price reductions, there are no significant market wide price crashes or unbelievable buy one get one 50% off sales. Now, it doesn't mean that those hidden gems don't exist in the housing market. It just requires knowing where and what to look for. The housing market remains ever changing. It's influenced by a lot of factors. Staying informed, working with experienced real estate agents, and understanding regional trends is essential for making good decisions in this competitive market. If you're looking for a real estate agent, I can help you find one. The link is in the description. Will the housing market crash anytime soon? With the economy being so unpredictable, it's hard to say. Major employers are having layoffs. The Federal Reserve is still trying to fight inflation. On top of that, you add the rising cost of living. I could definitely see some sort of housing market crash, but again, it's hard to say for sure. I think what's more likely is a gridlock in the housing market. With the uncertain economy, people will remain where they are and won't move. This will further contribute to the low inventory that we're already experiencing. I wouldn't be surprised if prices still rise in some of the more competitive regions. How much does it cost to buy a home? Check out this video to find out, or this playlist about the home buying process. Reach out to me if you have any real estate questions. My contact information is in the description below. Thanks for watching to the end, especially if you're a subscriber.